Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Okay, traders, this video is being filmed on Tuesday night for Wednesday's trading, 4/15/09. And interestingly enough, Omni was looking for an up move yesterday, flipped and turned red for today. So Wednesday, red Omni in the S&P. We have a green Omni in soybeans, so yeah, at least one green Omni comes out of this thing. So S&P down, soybeans up. Now traders, yesterday I stood in front of you with a bunch of charts, and luckily we're day traders, and they looked like you're going to have to be a buyer of dips. The Omni came out, we got long. Turned out we ended up buying the dead low of the most of the trading session. We bought them at, I don't know, somewhere around 843-ish. It rallied to 857 where we exited our positions. The market came down. We got long again. It went back up. We took another 4 points out of the market. After that, we actually got long a third time, but that's the afternoon delight trade in the premium room, and we won't discuss that. Again, trading from the long side, we made a few more points. So yesterday worked very well. The analysis was dead on for where to get in and where to get out. The interesting thing about being day traders is you can be long today and short tomorrow. We were long yesterday, made money doing it. We are going short today. Traders, the name of this video is Flat Tops Produce Market Drops. What I'm trying to say is, especially in the indices, when you get to a point where the market hits a high, comes off that day, next day runs up, hits a high, same high as the day before or close enough to it, comes back off, a third day takes place where the market goes up again, and now you're starting to get what we call a flat top. Take a look at the illustration on the board right here, traders. You have a market moving higher. 1, 2, 3, it goes up, 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 right? Then you have a day where you have a high, comes back off. The next day you have a high, almost the same as the day before, comes back off. If there's a third day or more, sometimes you get 4 days out of a market flat top. But when you get a flat top, it generally produces a market drop. So we put the brakes on buying one day, and next day we're selling. Now traders, I had mentioned do not fall in love with the upside. I had come off my board a few videos back. It's still off the board. There's a reason why I will keep it off the board, but the way indicators went from pinned into an overbought level looking bullish on Tuesday to overbought and look out for the downside by Wednesday, that's a turnaround. Now it could be a short-lived turnaround where we go down a few days and head right back up because we're in this little uptrend lately. But we're day traders, so we'll take this one day at a time. For tomorrow, we will focus on a breakout in soybeans on the upside and flat tops being produced in Dow Jones Industrial Average, Dow Jones Transportation Average, and the NASDAQ, and flat tops produce market drops. With that being said, trader, let's go to the charts. Okay, traders, the first chart you are looking at is the NASDAQ June daily bar chart. A few things on this chart, so let's take a look. Flat tops produce market drops. What does that mean? Traders, the illustration I just showed you on the board, here's a live one that happened in the NASDAQ. Top 1, 2, 3, and then the drop comes, right? Flat tops produce market drops. Here we are again, that very same look, flat 1, flat 2, flat 3. The likelihood of a drop will come tomorrow. Indicators have gone from being like this, pinned on the upside, to completely flipping and now pointing down. Many indicators, technical indicators, have gone from overbought but looking steady to overbought and looking lower. Now, what else is going on here? Traders, we have a channel that we have been in for quite some time in the NASDAQ, and it's been respecting the top and bottom of that channel. Well, at this point in time, it looks like we will penetrate this channel and go towards the downside. Another thing going on here, the triple top, 1, 2, 3. The reason why Omni became bullish and we became bullish, slightly bullish I should say, or at least a buyer of dips in the indices, was because NASDAQ on this day got above its triple top and stayed that way and has been above it since. Also, we've come above the Omni average and have been above it for quite some time. So, yes, a flat top should produce a market drop, but it could be a short-lived drop. I realize that we're in a bear market, but until the NASDAQ, the leader of the S&P, gets first below its triple top and then below the Omni average, I will still be a conservative buyer of dips. So do not get confused. Yes, we're in a bear market. The bear market as of late has flattened, as you can see. The first part of this chart starts all the way up here and comes down. Now we've been in a flat. The market is growing out of that flat, coming back to backfill and test the triple top makes a lot of sense. Let's see what happens if we can get past that. For now, I'm hoping we hit the triple top and rally up, but as you see in the past, flat tops produce market drops. This is not the only indice where that will be illustrated. Let's look at another chart here. Okay, traders, what's next? Dow Jones Industrial Average. Look how clearly defined flat tops produce market drops. Here, flat top, market drops. Here, flat top, market drops. Here we have a flat top. Will the market drop? Well, we are above the Omni average, so again, I have to be very cautious here. Yes, I guess I have to continue to call myself a conservative buyer of dips right now, but a couple of closes below that average and hasta la vista for that idea, and don't fall in love with the upside, goes right back on the board. For now, we'll be hopeful. Traders, you also have this major support line, which it looks like we're going to take out first thing tomorrow in the industrial average. We've had this major resistance line. So far, it hit here and failed. It hit here and failed. And I guess we might end up calling that a failure. So as you can see, we are literally at one of those do or die levels in the market. If it can do and get itself up above here, well, hey, heads up to the market. If it dies off right here, traders, I think we lose enthusiasm very quickly in the market and this thing falls apart. Be careful at this juncture. Let's look at another chart here. Okay, traders, Dow Jones Transportation Average and flat top. What happens after it? Market drop. Where are we now? Flat top right here. What should come after it? Market drop. You see it's stalling at the Omni level. Again, I'm hoping for you, baby. I hope this thing can get bullish, but it's starting to show signs of weakening. Once again, look at the trend channel that we're in. And every time we hit top and bottom, we bounce, but here it's kind of squeezing itself. Indicators are now bearish. We have a flat top. You know, we're probably going to fall out of this channel and test a couple of downside days here. You can see that the analysis and the indices are all beginning to point towards at least a down day or two coming starting on Wednesday. Let's see what happens. All right, traders, now a chart that's a better look. It's a look at the bright side of things. Something going up, something that looks promising. Look at the soybeans, traders. Again, above the Omni average, and it has had its fight with the average. It got above it, back below it. It got above it again, tested it, and is now beginning to take off. Look at the size of this apex we've broken out of. On top of that, look at this channel that it's riding in beautifully. I'll bet you this thing's going to head up here. And for you technicians out there who are paying attention, the 200-day average comes in somewhere up here, right around the top of that channel. Good reason to think the soybeans may get up there. Another thing, U.S. dollars look weak at this point in time. If the U.S. dollar begins to, or continues, I should say, to drop, it will give a hoist or a buoyness to soybeans. In other words, soybeans become buoyant when dollars go lower. Soybeans are priced in dollars. If you had a scale here with U.S. dollars on this side and beans on the other side, if the dollars went up, the beans would go down. So if the dollars go down, the beans go up. It's like a scale. That's the way these things work. So right now, if dollars continue to point lower, soybeans inherently want to go higher, but the technicals are very strong here in beans as well. Pull your charts, traders. Look for your flat tops. Check out the soybeans. See if it looks bullish to you. Make sure you always do your own homework, and I'll see you back at the site. So, traders, you've seen those charts. Hooray for soybeans. Go, baby, go. If you look at soy meal, boy, oh boy, does the soy meal look strong as well. All right, traders. So, once again, here we are. S&P looks like it wants to go back down. Traders, do your homework on flat tops. Do yourselves a favor here. Go pull like the Dow Jones Industrial average for the last 5 years or 3 years. Or take the cash S&P chart and look at how many times flat tops have produced market drops. I think you'll see what I mean there. All right, traders, don't forget the Mandalay Bay the Money Show next month. It's next month, right, guys? Next month, that's May 11th through the 14th. Traders, book your tickets, book your flights. Come on down to the Mandalay Bay and join the Omniacs on May 11th through the 14th. I have a speaking engagement. I will be set the stage, main stage, on Thursday the 14th. Make sure you come on down and meet us, traders. Also, the trading contest is going quite well. Omniacs up yours for the trading contest. Keep up the good work. Thank you for using your blogs in the trading contest, traders. It really does help the other traders who are studying here at the Omni Trading Academy. All right, traders. So, another day where Omni says, hey, you might have caught something on the upside yesterday, but the market ended up lower and the Omni wants down. So let's see what happens with the ES on the downside. Traders, at my site, it's www.livewithoscar.com. You can see a setup for the S&P and the setup for beans right now. Please go take a look. Always be sure to place your orders as soon as the Omni comes out, and I will flash update you as always if there are changes to those orders. All right, traders. Guys, anything else I need to do in this video, or are we out of here? Good? All right, I'm out of here. I want to go check out some markets. So give me a call anytime, day or night. 702-629-4755. And as always, keep your emotions out of trading. And, of course, always use stops and always place stops first. One of the best ways I can help you with controlling your emotions is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.